Now, this week is going to be very important out here for the stock market, but what if I told you guys Jay Powell in the FOMC meeting might not be the biggest concern the stock market has? We can see some of the big tech stocks like Nvidia continue to crash lower, or is what I'm about to talk about today potentially going to cause all of the Magnificent Seven stocks to come crashing lower? And we're also going to talk about the key levels and news we need to contend with for today. Now, unless you've been under a rock somewhere, you guys know we are in the midst of earnings season. And this morning in pre-market, PayPal has already come out with earnings. But after the bell, we have another big one. We have AMD, we have Microsoft, we have Starbucks, we have Pinterest, just to name a few. And let's not forget the big expected movers out there today. PayPal plus or minus 9%, AMD plus or minus 9%. Starbucks plus or minus 7.5 to 8% out there, and Microsoft is only expected to move roughly 5% on the day. Well, if we come over and look at PayPal right now in pre-market, we see this horizontal line right here. This is where PayPal is trading in pre-market, and in pre-market, PayPal is up $4.16 or up 7% on this session. Now, the question is, will this gap hold, and will the other stocks also have favorable reactions to the earnings coming out? If you guys remember yesterday, McDonald's came out with earnings disappointed, and the stock was up 3.74%. We come over this morning and take a look at the fear and greed index. Right now, we are sitting at 47, and we look at this article right here. Citigroup says history favors stocks and bond bulls alike when the FOMC meets. So, is that going to be favorable for stocks? Because last night on stream, we saw the Nikkei crashing lower. It did come back well after the stream. We saw the HSI gapping lower and continue to go lower as well. And I warned you guys last night on stream that when the Nasdaq down over 100 points during the Asia session, we are likely going to get a bounce back up. And I shared with you guys that last trade from the stream last night over in the community post. If you guys want to go ahead and take a look at that. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, before we talk about what could potentially cause another leg lower in stocks, let's come over and take a look at the dollar index real quick. Right now in pre-market, we can see the dollar index is up a whopping 7 cents on the session. And we look out here on the daily, you can see the dollar index continues to try to grind up here just a bit. Also, we want to pay attention to the VIX. The VIX has seen a surge as of lately, but right now in pre-market, the VIX is essentially flat, down 0.1. Crude oil this morning is also down, once again, down 57 cents on the session. Now, lower crude oil prices should be good for the fight on inflation, which would also play into the Fed's hands of essentially cutting rates at the next meeting. And again, we know Wednesday is going to be filled with a lot of economic news, and at 2 p.m., we're going to learn, is the Fed going to cut rates this month, or are they going to wait out there until September? And at 2:30, when Jay Powell takes the podium, we are likely going to have a lot of fireworks out there. However, when we look at the news for today at 9 a.m., we have the S&P CS Composite 20 HPI year over year. But then at 10 a.m., consumer confidence, JOLTS job openings. Then tonight, we do have a lot of news. Aussie has their CPI data coming out. But more importantly, the BOJ has their monetary policy rate statement. Traders are focused on a central bank this week, but it may not be the Fed. Now, if we go on to what this article basically says, it says we have 3 central banks meeting this week. We have the US central bank, meaning the FOMC. We have the Bank of England. Then we also have the BOJ. Now, the BOJ is going to be critical for more than one reason. And to understand this, we need to come over and look at a chart of the dollar yen. The dollar yen has been on a tear for quite some time, and we know the BOJ wants to stop this from happening. They want to see the yen start to strengthen a bit. Now, if they want to see the yen strengthen, what does that mean? Essentially, this article right over here talks about this chart right over here, and I want you guys to think about this. Think about when the pandemic happened, all right? After that, we saw this rising on the way up, and what did stocks do from 2021 until the current time? So what does this mean for stocks if the yields start to come back down? Look what happened in 2020 when the yields came down drastically out here to stocks. In case you need a refresher, here's what the S&P 500 did. The S&P 500 dropped around 34% straight down when that happened. I'm not saying we're going to drop straight down, but let's talk about how the BOJ could affect the spread. Now, one way, and this would not be good out here for the markets, would be in the fact of buying less bonds. Now, buying less bonds when bonds go down, what does that do out there to interest rates? Interest rates start to rise. If interest rates start to rise, what is going to happen to to the small caps like IWM, where IWM has really benefited from the rates coming down lower recently. Is this going to unwind all the movement that the IWM has had coming up? Keep in mind, the BOJ has their monetary policy statement tentative. Normally it's somewhere between 1 o'clock in the morning Eastern time. So when we wake up Wednesday, we should see some of the effects that took place from the BOJ monetary policy statement. Now, when we look at the diamonds in pre-market, down 21 cents. We come over and look at the QQQs in pre-market, up $1.60. And we got to ask ourselves the question, is this gap over here going to come back and get filled? We have already completed the ABC pattern to the downside at about 454.53. We just barely missed it by a couple ticks, but it's close enough. We look at the MACD indicator, still looks extremely weak on the daily chart. On the 4-hour chart, MACD indicator is trying to base out. And on the 1-hour chart, you can see we've already been working our way up towards the zero line. However, this is twofold. This is dangerous and it's constructive. One, yes, we have a bullish alignment, but when the MACD indicator gets back towards the zero line, that could be problematic. And if you look on the 30-minute chart, I want to make everybody aware, Apex 7A, massive 80% sale off all their valuation accounts, pass in as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. And if you look on the 30-minute chart, that's exactly what we've had. Now, last night after hours, we actually saw the indices rolling down substantially, which we'll take a look at when we look at the futures markets. Now, one thing to note, yesterday was a D as in dog shaped profile, which means I expect a breakout or breakdown from this pattern. Now, value area low will come in at 463.67. The point of control is at 464.29, and value area high will come in at 466.23. Now, the way we first break normally is a false break. And you might say, well, Mike, right now in pre-market, we're already trading above the point of control. So does that mean we're going to flip and go right down? And the answer is no, because last night, which we'll take a look at the futures markets here in a moment, they were coming down substantially. So the first break was essentially last night when we broke lower, only to come back up higher. Now, to help you guys understand this a little bit better, right here, you can see was last night, and I really like the pattern that could potentially be playing out. Notice on the weekly profiles, we are now currently above value area low. Then we come over and pull our Fibonacci extension tool. A to B equals C to D, and that gives us a price projection all the way up here at 19,556. If you notice, remember, we have this structure breakdown point as well that could act as a magnet. So we'll see. Do we overthrow the ABC pattern completion and make it up towards a 127 extension, which will put us right on the other side of this minus development area? This is something we want to pay attention to this morning. Then as we look at last night, notice what did the futures markets do? They broke below the low from the prior day. So if we come back over here and we look, think about this as last night, we were basically trading below this low so that we would have seen the Nasdaq down here only to come back up. And that's why I'm saying, the false break could have already taken place. Now, as we come over and we look at this, notice this has been a pretty good push all the way from the low straight on up. Now, are we going to get a little bit of a correction on the way back down, or are we going to continue to go higher? Notice the daily point of control is at 19,307.50. That is of importance. Also, we have been below value area low from the prior day, and now we are above it. So from a daily perspective, we do have a volume profile rotation trade on the way up. Now, where this would be negated would be if we break back below value area low, or if we get all the way above value area high, and then we turn and start coming back down below that price point, then we want to be on the sell side of the markets. As we come over and look at the SPY real quick, just like we talked about with the Nasdaq, we do have a gap above us. However, the S&P has completed its ABC pattern to the downside. We have the A to B leg, the B to C leg, and you can see we've completed the ABC pattern. Now, I warned you guys about this a few days back. This candle right here, a shooting star looking candle in the context of a downtrend, could be part of a reversal pattern on the way up, or at least a tradable bounce. And that's exactly what has been unfolding. Now, we really need to break the top of that candle, which has not taken place yet. Then we can look for gap resistance and possibly fill in the gap. On the 4-hour chart, the MACD indicator is basically based out. And on the 1-hour chart, we're working our way up towards the zero line. But on the 30-minute chart, you can see we flatline near the zero line, But last night after hours, we saw the market was going lower, and we look at the volume profile levels real quick. We have value area low at 544.55. The point of control will come in at 545.28. And value area high will come in at about 545.98. Now, in pre-market, we are trading above value area high. As long as we stay above it, I want to go ahead and target kind of the top of this consolidation area at about 547.38. Then all the way up here towards gap resistance, 549.13. And let's not forget, we have this structure breakdown point where the market basically gapped right below this swing point. Now the question is, will this act as a magnet? I think it will. I don't know that we'll make it all the way up there today, but I do think this area is going to come back and get retested in the near future. And that's somewhere in the ballpark of 551 to about 551.67. Anything above that, then we'd be looking for the gap to come back and get filled. As we jump over and look at the futures markets, notice last night we dipped below value area low right here. Boom, got bought right back up. Now the question is, will we be able to get above this high volume area in the market today, possibly trying to work back up towards this structure breakdown point right over here? Now I am going to go ahead and mark this off on the charts. This is essentially going to be from the candle wick right up here towards the candle body. Now that zone is going to come in from a price point of about 55.43 up here to about 55.54. So keep an eye on that level. If things really get rocking and rolling today, this is exactly the area I most certainly want to pay close attention to today. As we look at the daily profiles, you can see last night during Asia, we were able to break the low from yesterday, and then we essentially rallied back up. We got back above value area low. We hit the point of control, and we're almost all the way up here at value area high. Now, if we break value area high, we want to see, can we hold above it? If the answer is yes, then I want to target near the highs of yesterday. Then I want to target that magnet zone that we just talked about. That breakdown point essentially showed you guys out here on the 4-hour charts. All right, so now let's take a look at the overnight volume profile levels real quick. We have value area low on the Nasdaq coming in at 19,165.50. We have the point of control at 19,246.00. Value area high will come in at 19,278.00. Now, if we can crack above value area high, then guess what? The point of control from yesterday is going to be the next target. Then all the way up here at value area high from the prior day. But I want to show you guys something. Let's assume that the market comes all the way above value area high from the prior day, starts to show signs of weakness. This is where we could flip, looking to target the point of control, then all the overnight volume profile levels that we just spoke about. Then as we come over and look at the S&P 500, we have value area low at 5492.50. We have the point of control coming in at 5313.50. Value area high will come in at 5515.50. Now, right now, we should be in a rotation on the way up when we look at the daily chart. You can see we've already been below value area low, and now we're back above it. We haven't quite hit that 55.17 price point. Now, in the event that we do, we get above that price point. If we start coming back down, guess what? We break 55.17.75. Then we can look to target 55.1550, the point of control, and then all the way down here towards value area low. Remember, volume profile can give us a heads up in terms of should we be bullish or should we be bearish this market. And if you guys want to learn how to trade double bottoms using order flow, watch this video right here.